Over the past several months, I've been making content almost exclusively for SoFi, but the truth is, over that same period, there's been an asset that I've been buying way heavier than I've been buying SoFi. And in this video, I'm going to be sharing exactly what that is and why I'm buying so heavily. Of course, for those of you that follow me on X, you'll realize that I made a post about this. 64% of you responded wanting to hear me talk a little bit more about this, which led to this video. The asset is, of course, Bitcoin, and right now it's about 9.5% of my total portfolio overall. By far the largest cryptocurrency that I own. It's my third largest position in my portfolio. Along with Ethereum and Solana, my entire crypto allocation is around 15% of my total portfolio. Bitcoin is 9.5% of that. Now, there's a couple of reasons why I've been buying Bitcoin so heavily, but I think they can be summarized into two major categories. The first is, of course, the news that we're having around Bitcoin, the momentum shift that we're seeing. The Grayscale ruling was just the latest in a long line of positive catalysts for Bitcoin from a news perspective, but also SEC lost a couple of months ago their case with Ripple as well. It's also a pretty big reputational hit for Gary Gensler and the entire SEC in general, just losing two cases that are monumental, one after the other, and especially some of the feedback that they've been getting from these judges in terms of the basis for the SEC's case in general. So we have the Coinbase case coming up next, and we're expecting a win from Coinbase there as well. I mean, the SEC might simply lack leverage for Coinbase, especially after they just lost with Grayscale. So there's even a possibility that it can get dropped altogether, but I seriously doubt that. It seems that Gary Gensler really has a vendetta against these ETF filings for Grayscale. Even JP Morgan came out after the SEC's loss that they may be forced to approve multiple spot Bitcoin ETFs after Grayscale's court victory. And I think that when it comes to these ETFs, the first domino to fall, the first court case that gets won against the SEC will set a precedent for all subsequent court cases. Now, if JP Morgan wasn't enough, even the former SEC chair came on to CNBC Squawk to say that the approval of a spot ETF is inevitable.
Crypto is a technology. Bitcoin is one manifestation of that technology providing a product. When crypto came to our retail markets, many people used crypto to develop products that were clearly non-compliant with our securities laws. The SEC had to tamp down on that, and we did. Now the SEC has to deal with the lines between securities offerings, securities trading, non-securities offerings, non-securities tradings, and things like stablecoin. It is clear that Bitcoin is not a security. It is clear that Bitcoin is something that retail investors want access to, that institutional investors want access to. And importantly, some of our most trusted providers who are fiduciaries or have duties of best interest want to provide this product to the retail public. So I think an approval isn't inevitable. The dichotomy between a futures product and a cash product can't go on forever. And so I think that's the path we're on.
So it's right now more of a question of when a Bitcoin ETF will be approved and not if a Bitcoin ETF will be approved. So that was one of the major questions, right? It's something that I mentioned on my podcast with Tanner. It seems like these court cases will set precedents for future cases, with Coinbase, but also with others. And we know for a fact that there's numerous ETFs in play by huge institutions. So just on this list alone, you can see the ETF names: Blackrock, ARK Invest, Grayscale, Van Eck, a bunch of other ones. You can see their ETF decisions and their timelines. And as you can see, many of them are absolutely imminent later in 2023. So there's a very high probability that we're going to see one of these ETFs go live very shortly. Now, there's been Bloomberg analysts that have come out after the Grayscale decision that estimated there's a 75% chance of a spot Bitcoin ETF in 2023. And while this is bullish, I think most of the market is actually expecting most of these ETFs to go live as early as 2024. But if a spot Bitcoin ETF is approved in 2023, that adds more fuel to the fire to lead into the second piece of major news, which is the halving. But before we go into the halving, what I will say while we're on the ETF point is, number one, this is a really big deal, right? If we get multiple ETFs around Bitcoins, it unlocks a lot of different funds and a lot of different people who can now have exposure to crypto without owning the actual cryptocurrencies itself. Up until now, you were buying MicroStrategy, you were buying Bitcoin miners to have exposure to cryptocurrency. Now that you're going to have ETFs, you're going to have an easier way to do that. Think pension funds, think retirement funds. all of these different types of funds, not to mention large institutions that might have had regulatory blockages when it came to investing in Bitcoin can now invest through the ETFs. So really big decision because it's going to lead to massive inflows into the crypto space in general. So obviously it's going to be very big. But the second thing that I will say is I do believe that from the momentum that we're having from the Ripple case, the Grayscale case, and then the expected decision on the Coinbase case as well, and with all of these ETFs now pending approval from the SEC, I do think that ETF approvals are going to come before the halving is going to come, which is going to be early 2024, Q1, maybe Q2 at the very, very latest in 2024. But I think it's going to be coming sooner rather than later, and that is going to lead to a huge momentum shift in terms of driving that next rally upwards. So that's point number one. Reason number one why I'm buying is all of the positive momentum around these ETFs and the inflows that these ETFs will give us. Point number two is the halving. Now, if you don't know what that is, the halving is very basically a mechanism built into the system to control scarcity and inflation. Basically, the mining rewards from mining Bitcoin get cut in half. It started out that the reward was 50 Bitcoin, that got cut to 25, it got cut to 12 and a half. And this time it's at 6.25. It's going to get cut to 3.125 Bitcoin per block. Now, this makes Bitcoin mining progressively more difficult. And this is built into the system so that the more Bitcoin we have in circulation, the harder it is to put more Bitcoin into circulation. And what this does is it stabilizes the supply so that you don't have something like a US dollar, for example, that you can just print en masse whenever you want and drive inflation. You have a fixed number of Bitcoin out there, 21 million. Right now, about 89%, about 19 million is already in circulation, and there's 2 million left to mine. As we continue to have these halvings every 4 years, the total supply gets more and more stabilized due to how progressively more difficult it becomes to mine because you basically need more compute power to do it. Now, this halving event is coming in 2024. It happens every 210,000 blocks, roughly every 4 years. Funnily enough, it also coincides with the presidential election year, so 2016, 2020, 2024, 2028, 2032, so on and so forth. So why does really the market go up when you have halving events? The reason is because you have the rate of new Bitcoin entering circulation decreases. So the supply decreases and the demand goes up. Now, one of these firms in the crypto space, Pantera, released some targets on the halving. They basically expect a big rally going into 2024, so basically this winter. And what might happen if that rally continues throughout the year? They expect the halving date to be April 20th, 2024. I've heard from different Bitcoin people and content creators that it's somewhere between April 17th, April 20th, April 22nd. You know, it's every 210,000 blocks, right? So it's a rough estimation, but that week is when that halving is going to be happening on April 20th, 2024. And what could happen, Pantera estimates, is it could go up 4.2x to $147,000 Bitcoin. Now, obviously, that's going to be a huge influx. And as you can see from this chart, the last halving cycles, so 4-year cycles, shows you what those rallies have been like in terms of multiple expansion for Bitcoin. Historically, Bitcoin prices have tended to bottom around 477 days prior to the halving, leading to a rally before and especially after the actual event. Of course, there's diminishing returns with each subsequent halving. So you'll see in the early halvings, you had like 30x, 60x increase, and now we're expecting a 4.2x by Pantera because the asset class just becomes much larger. There's way more money flowing hands, and it's much more difficult to move that asset class that huge, right? So you have diminishing returns with every subsequent halving. Now, keep in mind that as we move towards the halving in April, the rally will continue and accelerate to that event. But all-time highs for Bitcoin historically, by using 2016 and 2020 as our guide, roughly 9 to 15 months is a sweet spot for when Bitcoin will hit all-time highs after the halving event. So sometime around September of 2025. So let's just pause a little bit in terms of supply and demand, because I think that this is one of the major reasons why Bitcoin is going to see a rally. The first thing I want to throw up here is that the quantity of dormant supply is increasing. About 1.8 million Bitcoin has been dormant, and this amount is growing fast. The amount of people basically just holding in their wallets. And look, some of this might just be people who have lost their coins, who have lost their seed phrases, and that Bitcoin is forever lost. And that's still good for the rest of us because it lowers the total supply out there of people actually holding. But I think that the other cohort, people who are actually holding, who have held for the last 5 years, they've held through the last cycle, right? Bitcoin peaked around 69,000 per Bitcoin back in December of 21. These people have held that all the way through, and they've held all the way down to when Bitcoin fell under 20,000. So these are not going to be people that are going to be selling anytime soon. Even if we retest the last cycle highs, 69,000, they're not really going to sell or be tempted to liquidate their positions because they already reached 69,000 back in 2021. Now let's talk a little bit about the demand. The Bitcoin non-zero addresses have been steadily increasing and continuously reaching all-time highs. Now what this is the number of wallets that have at least 0.01 Bitcoin, some Bitcoin in it. We're at 49 million non-zero addresses, i.e. wallets holding Bitcoin. Now I can go and open 100 different wallets and I can put 0.001 Bitcoin in each of them. And it's not really a one-to-one relationship with how many people are in Bitcoin, but it does also speak to the wider adoption of this number if it consistently breaks all-time highs despite this chart is a logarithm chart, right? So the Bitcoin has been rising significantly and yet still adoption is rising along with it. And it's a similar story if you look at the addresses that hold over one whole Bitcoin, that's also been going up. And all of these are statistics that you want to see on a macro scale because they speak towards long-term adoption of this asset. Now, one of the other points here that I want to make around demand is Blackrock. Blackrock is one of the world's biggest institutions and they've been accumulating pretty heavily. Over the last several months alone, BlackRock has been accumulating huge amounts of Bitcoin in addition to buying shares of crypto mining companies and overall increasing their allocation in a large amount in the crypto space. Now, BlackRock obviously has their hands in pretty much every asset class across the board, but the fact that we're going to have these massive ETFs coming, this is going to drastically increase institutional adoption into Bitcoin, and we're going to see more of this accumulation from large institutions such as BlackRock and others, and that's going to stabilize the volatility from one whale dumping. For example, news around SpaceX dumping their Bitcoin and the price fell from 30,000 to 25,000. You're going to have less of that volatility once you have these massive institutional bases that are holding the cryptocurrency, similar to what you have in something like an established stock, right? You have a large portion of it being institutionally held and you have a lower volatility overall. But here you have to consider the fixed supply, right? Because there's only a finite supply in the world, this is going to lead to a huge rally when these institutions go in heavier. And ETFs are a huge part of unlocking this puzzle because there's tons of people who want exposure to the asset class but can't really go and buy it outright. Although we've had already a 9 to 10% dip in August, we're forming a head and shoulders pattern on the monthly chart from a technical perspective. But I do think the BlackRock news, the ETF news around Grayscale and the SEC, and going into the next halving cycle, when you put them all together, I think everything is in place to propel Bitcoin into the next rally. It seems as though the reward far outweighs the risk at this point in time going into 2024. Even JP Morgan last week highlighted that as a result of the Grayscale ruling, they see crypto sell-off being almost over, and going forward, they said there's limited downside risk over the near term for crypto in general. Now, at a super high level, if we simply zoom out and put all of this into context, the halving cycles, the ETFs all play into this supply and demand of this asset class as a whole. And at a high level, this is why I think that Bitcoin prices are inevitably going to rise, and also the reason why it's been the best performing asset class over the last decade. Because you have a limited fixed supply, and it progressively gets harder and harder and harder to dilute that supply. Now, it might seem as though we still have 11% of the float to go from 19 million coins to 21 million coins, but because it gets progressively more difficult, it's estimated that the last Bitcoin is going to be mined 117 years from now in the year 2140. So in other words, the supply is super stable, and every halving cycle, it becomes even more stable, preventing even further dilution, so to speak. Or to put it into currency terms, preventing even further inflation from any given central governing body. And the argument becomes very simple, right? If all of these institutions simply allocated a single digit percentage into Bitcoin just as a hedge in terms of another asset class allocation, right? They own commodities, they own treasuries, they own real estate, they own equities. even if they added a single digit percentage of Bitcoin, we would see a significant surge in Bitcoin right now. So if we put all of these things together, the ETFs, halving cycles, adoption metrics around more wallets, holding more Bitcoin, this all contributes into a virtuous cycle of Bitcoin rising significantly, especially over the next 12 to 18 months as we enter into that halving cycle, as history has shown us. And all of this is the reason why it's the third largest position in my portfolio, around 10% of my overall portfolio, why I think it's going to be one of the best performing asset classes for the next 10 years, and why I'm continuously adding in anticipation of these events. With every news article that comes out that's progressively more bullish for Bitcoin in terms of this SEC decision, in terms of these ETF approvals, that's all good for me, right? Because going into the next cycle, if history is any guide, we should all be doing very, very well. This is obviously not financial advice. This is the reason why I've been buying. I hope you enjoyed this video. It was actually really fun to make. For right now, this is the Fundamentals Investing Podcast. Thank you so much for listening.